Are you tired of the 9 to 5 grind? Maybe your boss or coworkers drive you crazy, or you're just craving some more freedom. Well, you're not alone because in a recent survey, 59% of Canadians have stated they want to start a business, which is the highest it's been in about 8 years. I've built financial plans for everyone from solo entrepreneurs to companies with 50 or more employees, and I've seen how business ownership can create real wealth and freedom. And personally, I was an employee for quite a while, and starting a business was one of the best decisions of my life. So in this video, I'm going to show you all the great reasons to start a business in Canada, but also a few of the reasons why you shouldn't at the end. The first reason is you'll own what you build. Now take a look at the list here of the top 10 wealthiest Canadians. What do they all have in common? Well, I'll give you a hint. They're not employees, they're business owners. They built something they actually own. As an employee, it's almost impossible to build real ownership. You might get some stock options if you work at, say, like a tech company like Amazon or Google, but even then, these stock options will vest quite slowly, often over a period of like 4 years. You're essentially helping someone else build equity, not your own. The only real exception is if you join early as an employee at a startup and get some ownership shares, but those opportunities are quite rare. When you start your own business, you flip that equation. You own the upside, you control the growth, the brand, and the value of what you're building. Every hour of sweat equity you put in adds to something that belongs to you, not a faceless corporation. And here's where Canada gives business owners a big advantage, because when you incorporate and build real value in your company, that equity can become incredibly valuable. Even better, if you structure it properly, you can eventually sell your business and potentially pay little or even zero tax on the sale through something called the lifetime capital gains exemption, which I'll get into more later in the tax section. All right, next is freedom. Entrepreneurship can give you a level of freedom that's hard to find anywhere else, but it plays out very differently from person to person.
So for the first 4 years of running my freelance writing business, I used to get to work by 7:30 a.m. But today I work like 4 hours each day, and I still make the same money I made when I worked 16 hours.
I've worked with business owners making over $100,000 a month while only putting in a few hours a week of work. Their businesses ran on systems, automation, and trust in great people. I've also seen others working over 100 hours a week, constantly stressed and barely making ends meet. The difference usually comes down to structure. The ones who eventually get their time back learn to build systems, delegate, and remove themselves from day-to-day operations. Their business works for them, not the other way around. Though I will say almost every entrepreneur will start in some chaos of long hours, perhaps doing everything from sales to bookkeeping just to survive. And that grind is often necessary, but it shouldn't last forever. The goal is to evolve from working on your business to your business working for you, because that's when you gain real freedom, both financially and personally. And if you're in that phase where your income's finally growing, but you haven't had time to plan, that's where we come in. And that's where I love helping a lot of up and coming entrepreneurs, because here at Blueprint Financial, we help business owners structure their income, taxes, and corporations the smart way, so your hard work turns into lasting freedom. To build the business and life you want, you need the right blueprint, so check out our services and book a free discovery call today. Next up is tax advantages, and this is where business ownership in Canada can really shine. It can get quite technical, but the payoff can be worth it. So when you're an employee, you earn income, the government taxes it first, and you spend what's left over. As a business owner though, it's the opposite. You earn revenue and then deduct legitimate expenses and then pay tax on what's left. And that gives you far more control and flexibility. Let me explain some tax write-offs and flexibility. Business owners can deduct expenses that directly support their work, things like a home office, laptop, phone bill, internet travel, and client meals. You can even hire family members and pay them reasonable wages if they actually help in the business, such as handling admin tasks, bookkeeping, or marketing. This is kind of like an indirect form of income splitting by shifting some income to family members in lower tax brackets, which should reduce your overall family tax bill. Every deduction lowers your taxable income and keeps more money in your pocket. So here's an example of an employee earning $200,000 who might pay about $70,000 in tax, whereas a sole proprietor earning the same amount but with $50,000 in valid expenses, including wages to a spouse or a child for real work, would only be taxed on $150,000, saving roughly about $20,000 to $25,000. The key here is that expenses must be reasonable, well documented, and clearly business related to qualify. So don't go hiring your spouse or child to do assistant work for $100,000 per year because that probably won't work out well in the eyes of the CRA. Now, incorporation benefits, when you incorporate, you unlock even more tax advantages and flexibility. And that's an important distinction from just a sole proprietor. The small business tax rate on the first $500,000 of active income can be around 9 to 13%, depending on your province, which is far lower than the top personal tax rate of over 50%. And this is crucial because this difference allows for a lot more tax deferral, meaning you can leave profits inside the corporation and decide later when to pay yourself, and you can often structure it in a lower tax year. So for example, say your corporation earns $200,000 in profit, you pay about $22,000 in corporate tax, or 11%, leaving $178,000 in the company. That's way more cash you have on hand than if you were, say, a sole proprietor or employee. And if you don't need that money personally right away, you could reinvest it by buying equipment, hiring people, investing in a corporate account, or saving for expansion without triggering any personal tax. And when you eventually withdraw the funds, you can plan to take them as salary or dividends, hopefully in a lower income year, and minimize total taxes. Then there's long-term wealth building. A corporation can also hold investments, life insurance, and pensions efficiently using tools like your individual pension plan or IPP, or things like your refundable dividend tax on hand or the RDTOH accounts. And when it's time to sell, a properly structured business may qualify for the lifetime capital gains exemption, or the LCGE, and that could potentially make over $1 million of that sale completely tax-free. Now just pause to think about how great that is for a minute, because there's nothing really in your personal income that is quite structured like this, other than maybe your principal residence. But other than that, there's no investment that you can make that's in a non-registered account that could really give you access to this type of tax savings. Next is legal protection. One of the most overlooked advantages of starting a corporation in Canada is the legal protection it provides. When you incorporate, you create a separate legal entity that owns the business, not you personally. And that separation matters a lot if something ever goes wrong. For example, imagine you invent and produce a toy and a child gets injured using it. If you're incorporated, that corporation is the one that gets sued, not you. Your personal assets like your home, your car, and savings are protected. The most you could lose is what's inside the company. Note, if you're just a sole proprietor, it's a completely different story. Legally, you and your business are the same entity, which means your personal assets can be at risk if someone sues you or if your business takes on debt that it can't pay. The legal term is called unlimited liability, which is something you want to avoid. And that's why many entrepreneurs choose to incorporate if they're in a business where they need protection from getting sued for their personal assets. It adds an extra layer of protection and peace of mind, especially in industries with higher risk. Scalability. As an employee, your income is directly tied to the hours you work. If you stop working, the income stops too. There's a ceiling on how much you can earn, no matter how talented or hardworking you are. Owning a business changes that. Your time isn't the only resource that generates income anymore. Systems, people, and technology can start multiplying your efforts. There are many ways to scale. You can hire and delegate, bringing in people who are better than you at certain parts of the business. You can build digital products or services that sell around the clock, creating income that isn't dependent on your time. Or you can license or franchise what you've built, letting others grow the brand while you earn a share of the profits. That's the real power of scalability. It's how small one-person operations evolve into million-dollar companies. Global entrepreneurial opportunities. For entrepreneurs who can work from anywhere, starting a business opens the door to potentially global tax planning opportunities. Especially if your business is primarily online or service-based, you have the flexibility to decide where operations are based and where income is earned. And with the right structure, you might be able to significantly reduce your overall tax bill. By working with professionals who understand cross-border rules, you can use tax treaties to avoid double taxation or set up foreign subsidiaries in lower tax countries to manage profits efficiently. Some Canadians even establish residency in other countries, allowing them to greatly lower both personal and corporate taxes. The key is planning because every country will have its own rules, and combining them strategically can help location-independent business owners keep more of what they earn. It's a legal, smart way to design a business that takes advantage of global opportunities, and it's a sector that we're seeing a lot of growth here at Blueprint, with a lot of clients wanting to actually exit Canada and set up businesses elsewhere. Next is Canada's talent and incentives advantage. One of Canada's greatest strengths is its workforce. The country offers a highly educated, multicultural pool of talent and welcomes skilled workers and entrepreneurs through various immigration programs. And while I do hear a lot of complaints about the Canadian red tape for business owners, and that can be frustrating, try starting a business in, say, Mexico or Thailand, and you'll probably quickly appreciate Canada's stability, access to funding, and reliable systems. Canada also actively supports innovation through grants, credits, and financing programs. The Scientific Research and Experimental Development, otherwise known as SHRED, tax credit can refund a large portion of the cost of research and development, including things like hiring developers to build apps and tools. I'm actually looking into this because I'm exploring some options for building some pretty cool fintech tools for Blueprint Financial here, and the types of grants and credits that you could receive is actually quite generous. On top of that, the Business Development Bank of Canada and the Export Development of Canada offers loans, financing, and export assistance, while provinces provide grants for hiring, training, green tech, and energy-efficient projects. These programs can drastically reduce startup costs, lower your risk of starting the business, and gives entrepreneurs the capital to scale faster.
You know what they don't tell you about running a business? It's fucking hard.
Now, all this sounds great, but I want to have a word of caution here. Now, before you dive in, it's important to be realistic, because starting a business isn't a shortcut to freedom overnight. Usually, it takes a lot of time, discipline, and patience to build something sustainable. I've seen plenty of people rush in, burn out, and give up within the first year because they underestimated how much work it really takes. For most people, it's probably a smarter idea to start as a side hustle, test out your idea, see if you can build traction, and make sure it's something you actually enjoy before going all in. You'll make mistakes early on, and that's okay because those lessons are what eventually will make you better as an entrepreneur. Because there is a lot to juggle. There's taxes, structure, clients, cash flow, and the constant uncertainty of if you'll be able to generate revenue. But with the right plan, it's all manageable. And for me, starting my own business has been perhaps the best decision I've ever made, but also one of the hardest. To me, it's not just about money, but it's about control, freedom, and building something that's yours. So if you got that entrepreneurial fire in you, and whatever stage of the journey that you're at, if you're just thinking about starting one or you're already well on your way, check out the services we offer for our business services here at blueprintfinancial.ca. And if you like what you see, book a free discovery call with us today. Please like and subscribe for more videos like this, and check out the next video I think that you'll like on the screen here.